Hello and welcome to Majlis and Markets, a podcast where we explore the trends shaping Islamic and global markets. I am your host, Hassan Jivraj. If you enjoy this episode, be sure to like, share, and subscribe. And don't forget to leave us a rating. You can also follow us on LinkedIn and Instagram at Majlis and Markets, or drop me a line at hassan@majlisandmarkets.com. Hello, everyone, and welcome to another episode of Majlis and Markets, our second episode on YouTube. As always, I am your host, Hassan Jivraj, and I'm really happy to welcome my second guest onto this video podcast, or vodcast, I should rather say. And it's a really dear friend of mine who I've known for quite a while, and someone who I got to know really early on in the Islamic finance industry, none other than Dr. Ryan Calder. Well, Ryan, welcome to Majlis and Markets, part 2.
Thank you so much for having me on, Hassan.
Yeah, it's really great to have you back on the podcast. You know, we did the first podcast, I think, way back at the end of 2022 or maybe at 2023 sometime, but I didn't end up publishing until the end of 2023. So I'm really glad that we could make this happen again. And like you're being my first guest on audio and you're my second guest on video. So I'm really happy we got to make that work. Ryan, could you give our viewers and listeners as well like a bit of a brief overview of you and like what you do and where you are?
Yeah, so I'm a sociologist. I teach at Johns Hopkins University, which is in Baltimore in the United States, East Coast. And I am also the director of the program in Islamic studies at that university. And I have sort of a funny background, I suppose. After graduating from university, I went into management consulting. And it was there that I was first exposed to Islamic finance. I eventually found my way to the Dubai office of my consulting firm, and I served clients in the Emirates and Saudi Arabia. And that's where I first heard about this Islamic finance business. I decided that it was not worth it to continue having a reasonable income. And I decided I wanted to, scrounge for the next 10 years. So I went off to do a PhD at the University of California, Berkeley, where I ended up studying sociology and using Islamic finance as sort of a case study to think about contemporary capitalism and its relationship with religion. And after that, I moved on to Johns Hopkins, where I am now.
Amazing. And Ryan, I'm sure people heard our 2-hour Maestro talk of Islamic finance on episode 1 of Majlis and Markets. And what have you been up to since the last podcast?
Yeah, so one thing I've done is finish and publish a book. The title is The Paradox of Islamic Finance. It came out in 2024 with Princeton University Press. And I try to give a really big picture set of reflections on Islamic finance. So there are a lot of places you can go to get, say, technical detail about a particular Shariah standard or a particular instrument. There are other places you can go to learn about the legal history of Islamic finance or the politics. But I go all the way back even to the beginning of Islam on this planet and take it all the way to the present. And then other than that, I've also been working on a couple of other projects. One is on frequent flyer miles, and the other one is on new halal products and what I call halalization. So these are things like halal pharmaceuticals and halal housing developments and halal biotech and things like this.
Amazing. Yeah, I've read the book. It's a fantastic book, by the way. Kudos on publishing that. I know you've been working on that for a very long time. And it's a really great read, even for someone who doesn't know too much about Islamic finance or is not an academic or a practitioner in the market. Really great for learning about the history of Islamic finance, and I would say the political economy as well of Islamic finance. And I really want to talk to you about that today. So you've talked about your research interest. So Ryan, I guess to begin with this conversation, Islamic finance, has it drifted from its ethical foundations?
So that depends whom you ask. Of course, it depends what you think the ethical foundations are. So if we focus on the sort of pioneers of thinking about an Islamic economy in contemporary terms. These are we talk about people like Rashid Rida in the early 20th century CE. We can talk about Muhammad Hamidullah in Hyderabad in the sort of interwar period. And then we can really talk a lot about sort of the early Islamic economists and development-oriented theorists, people like Ahmad al-Nagar in Egypt, who really invented the first Islamic bank in the Khamr Savings Bank in Egypt's Nile Delta in the 1960s. And all of these people had a vision that something called Islamic banking, they didn't really even call it Islamic finance then, but something that would be Islamic and involve the saving and investment of money would also be oriented toward improving the economic condition of large numbers of Muslims, particularly in many cases poor Muslims. Often to many people, this was a way of rejecting the yoke of European imperialism. And, they correctly identified European banking structures and financial structures as sort of parasitical in many colonial conditions. And so to many of them, this was a response, a way of both honoring God and improving the condition of Muslims during the late colonial period and eventually the post-colonial period. But so I think it's fair to say that relative to their vision, what we today call the Islamic finance industry has a different orientation. It is overwhelmingly a for-profit industry. And while some people argue that it does more for sort of the economic development of Muslim majority nations or for Muslim poor than conventional finance, I don't think the evidence is very strong that that's true, frankly. And that's for the simple reason that the vast majority of Islamic financial institutions, especially the large ones, are for-profit institutions. They have to compete against one another and against conventional banks. And so it is not part of their mission statement. It is not part of the CEO's mandate from shareholders to support economic development or to support the poor. In some cases, a CEO could even be legally, whether from the position of secular law or in some cases Islamic law, could be considered not to be doing his or her duty if the CEO were trying too hard to achieve developmental aims or to help the poor, right? The shareholders could say, look, your job is to maximize the value of this company. Your job is to turn a profit. You're not a charity. And so if you look at Islamic finance from that direction as a way for Muslims to adhere to the law, to adhere to Shariah as it is interpreted by the Sharia scholars who are dominant in the industry, and still enjoy the benefits of modern finance, then I think you could say it has been a success. But it really depends on your perspective.
I mean, if we take it back just a little bit, during the Prophet's time, peace be upon him, how was finance and economics in those times? Was it similar to Europe or was it similar to other empires within the world?
It was it was actually quite similar in several ways that I think are worth mentioning. One is that money lending was common, but the other in that money lending was very widely considered morally reprehensible, morally wrong. And there's a reason for that, which is that the vast majority of, if we take a historical perspective, one of the reasons for that is that the vast majority of lending was done for consumption purposes instead of production purposes. So what do I mean by that? Let's say you need to buy food because you have no money. Then I lend you money for that. That is a consumption loan. You are consuming food. Or you need a place to live. So I lend you the money and you pay to live in a hotel for a few weeks. That is a consumption loan. A production loan is I lend you money and you build a factory. Right. So in the time of the Prophet Muhammad, peace be upon him, and the people, and before that, in Mecca, most of the lending was done for consumption purposes. And if you needed a loan and you could not either get some kind of financial support from family or friends, or at the very least a qard hasan, a zero interest loan, then you were really in bad shape because you were going to have to turn to these people who made a living doing something considered very morally reprehensible, which was lending money and taking interest. So this was not unique to Mecca. This was not unique to the regions that would become Islamic regions. This was true in much of the populated world.
So I guess what I'm trying to get at here is that, in the book you've talked a lot about the modern industry, but I'm just trying to understand from my perspective is that this Islamic banking system that we have today, or the idea of Islamic banking, why do you think a lot of people supported it? And why do you think a lot of people would want such a system? Because what I'm trying to get at is they're trying to go back to the time, the traditions of the Prophet. Because, you hear stories about Abu Hanifa who wanted to have a more just and equitable system. You hear stories about Ali ibn Abi Talib who wanted a more just and equitable system. So I guess what I'm trying to get at is why do people yearn for this kind of?
Well, one reason is because in the history of Islamic thought, this period has been widely celebrated. And when I say this period, I mean the first few centuries after the arrival of the Prophet Muhammad has been celebrated as a golden period in the history of Islam. The teachings of the Prophet and the word of God transmitted through the Prophet helped to produce what was a stable and fast-growing society. And from an economic perspective, there are a set of institutions to which people refer that helped stabilize society and support all members of society. So people talk, for example, about the Baytul Mal, the treasury, which was a central financial institution that collected public revenues and helped to distribute them. People talk about zakat, kharaj, a land tax, and all these things helped provide for the poor and for general social welfare. Then we also have the notion of the muhtasib, so a market regulator, a market inspector, someone who did things like make sure that fair weights and measures were being used in the marketplace, make sure even that markets were clean and orderly and so on. So we start to see here the basic institutions of a market society being given grounding in Islam, but also institutions that ensure that we're not talking merely about a free-for-all market in which anyone can do anything and exploit anyone as much as they like, but rather a market in which there are rules about fairness and about transparency and about the distribution of spoils and benefits. So I think when there's a historical reality to those institutions. But in addition, the idea of those institutions has become important for many Muslims. And it certainly was important for many of the Muslim intellectuals who first theorized an Islamic economy in the late 19th century through the 1960s and 1970s.
I mean, just to be clear, it's not a communist system, right? It's a very capitalist, mercantile system, right?
When you say sort of the Islamic economic system in general?
Yeah, during that period, in the more medieval, ancient period, it wasn't like a communist system as we understand it today, right?
Yeah, I think that's correct. I mean, it really depends who you ask. So there have been people who have combined Islamic economic thought with communism, with Marxism. Ali Shariati, the sort of Iranian sociologist, actually is one of them. But I think it's fair to say that this was not a communist system. It seems clear that the Prophet Muhammad believed that markets were a good thing. I think it's important to remember that he was a merchant. He came from a family of merchants. His first wife was a successful merchant. And so he saw the benefit of markets, but he also saw that unregulated economic activity could hurt people. Things like moneylenders who took advantage of the poor, things like this. So I think you're absolutely right. I think these aspects were very important to many sort of early theorists of Islamic economics and Islamic finance.
And then throughout Islamic civilizations until the more modern period, how was economics like similar to that, or did it kind of mirror or replicate what was happening in Western Europe and the other parts of the world post Prophet Muhammad?
Yeah, so that's a great question. I'm going to focus. So broadly speaking, there were a lot of similarities with what's happening in much of the rest of the world. But one of the things that is unique about what I like to call the Islamicate world, I say Islamicate because I don't love the word Islamic or Muslim world because
very Orientalist take, right?
It's a bit Orientalist, yeah, and it assumes that sort of everyone living in these areas was Muslim, and of course that's not. Part of what gave it its richness was that there were many non-Muslims, for example, living under Muslim rule. But anyhow, in this sort of Islamicate rule, there were all kinds of developments. One of the biggest was long-distance trade, which took a great deal of investment capital. And so there were all kinds of structures, financial structures developed to invest money in merchants who would travel by sea or by horse and camel across thousands of miles across Eurasia, for example, or across Africa, across Asia to conduct trade. You also see the development of financial structures that help deal with this issue of riba. Now, what is riba? There have been many, many, many volumes written on this question, but in the Holy Quran, riba is described as something that is clearly pernicious. It is clearly sinful, but there's no strict economic definition given of it. And we look to the hadith literature to know better what it might be. But even there, it is not 100% crystal clear whether riba refers to, and I'm talking about riba of delay here. I'm not talking about riba
Mhm.
al-fadl, but whether it refers to any level of interest, right? I give you 100 dirhams and you give me 101 dirhams in
Mhm.
a year. Is that unacceptable? Or does it refer to a level of interest that's somehow socially pernicious or greedy or painful to you, such as I give you 100 dirhams and then next month, if you can't pay, it turns into 200. And then if you can't pay a month later, it turns into 400 and so
Mhm.
forth. So because of this ambiguity, there has always been some room for debate among Sharia experts, among other Muslim intellectuals, among people on the street as to what exactly this riba is and whether Islam prescribes an economic system that is completely interest-free.
Yeah, that's an interesting question. I guess this idea of riba, when you ask most people, they mean interest, but of course there's different kinds of riba, and depending on who you ask, it'll be interpreted differently, right? And I'm sure in different Islamic civilizations and empires, that was interpreted and adapted for its time, right?
Yes. So there has always been a lot of adaptation in Islamic economic structures and in the way Sharia gets applied. So if we look, for example, at the Geniza documents, which are from a warehouse in Cairo in the 9th, 10th century CE, the truth is that we find lots of people lending money at interest. There have always been Muslims lending money at interest, but what we also see in some cases, not only from the Geniza documents, but from other historical documents, is that from quite early on, Muslim merchants and others developed ways of simulating the economic effect of interest while not technically lending money at interest. And some of these use structures quite similar to what today is called financing murabaha. I should add that these were by no means unique to Islam. I published an article some years ago entitled God's Technicians, in which I note that Jewish rabbinical authorities from the 3rd century, 2nd century CE, as well as ulama ad-din, ulama Shariah, so Sharia scholars, as well as Christian canon lawyers, all use almost identical structures to allow people to have the effect of lending money at interest without technically doing so. And this is what I call interest stimulation. So this is not unique to Islam. However, and this is one of the paradoxes to me about Islamic finance, it's only Islam that has a now $3.5 trillion modern Islamic finance industry. So one of the questions I ask in the book is, why is that the case? What's so special about Islam?
And on a podcast before, I'm not sure on this one, but I think you and I were doing a podcast with the Australian lady back a few years ago. We mentioned about like how Islamic finance didn't really come from political events. The modern Islamic finance industry didn't really come from political events like the Iranian Revolution or the Soviet Union invasion of Afghanistan or Camp David or any other kind of like political events. It was more commercially driven, right? This kind of Islamic finance that we know today.
Yeah, I mean, I think those political events were important. You mentioned the Iranian Revolution of 1979. These were part of a a broader, what people call the Islamic revival or the Islamic neo-revival, in which in many Muslim majority and Muslim minority regions, Islam comes to play a larger role in public life. So sometimes this is politics with the advent of Islamist movements or Islamist parties. It's not only in Iran, but Jamaat-e-Islami in Pakistan and elsewhere, for example, the Muslim Brotherhood in much of the Arab world and beyond. These are groups that had been active in the 50s and 60s, but then by the 70s and 80s, they're becoming more prominent and getting more momentum and more involved in politics in much of the world. So this certainly contributes to a larger sense that Islam can and should play a role in public life, and by extension, that it can and should play a role in the economy. So, the Jamaat-e-Islami, many of them were early ideologues or intellectuals of sort of an Islamic economy. But I also think that probably even more important, in my opinion, was the oil boom of the 1970s that occasioned the largest wealth transfer in history around the world. in which the oil using countries, basically the rich countries of the global north, Western Europe, the United States, increasingly Japan, the price of oil spikes in 1973 and again in 1979. You have, massive capital flows going into the oil producing countries, particularly of the Middle East and North Africa, and most of all of the Gulf. And what does this do? Well, all of a sudden, places like Saudi Arabia and the UAE and Bahrain, Kuwait, these used to be like backwaters from the perspective of European bankers. You might just send your kind of local, the banker who's like just maybe for some weird reason speaks some Arabic or, has been in the area forever. It's a
Father
very
was a
sleepy
diplomat or
kind of
something.
thing.
Father was like a diplomat or
Exactly.
military or something. Yeah.
Precisely. But then in 1973, all of a sudden, the Gulf becomes the world center of wealth. And
Mm.
so you have bankers from Wall Street, from the city of London, from Frankfurt, sending on Riyadh, on Dubai, and on Kuwait City, and saying, what can we do to get your business? Now, in the 1960s, you'd had this example of other sort of development-oriented people trying to start Islamic banking, with the most prominent having been Ahmad al-Nagar in Egypt. But it's really in the 1970s that all of a sudden there's a ton of money behind this. And so you have these Western banks coming in saying, well, what can we do to serve you? A few of these very wealthy Gulf Arabs said, well, we hear there's this thing called Islamic banking, and we'd like to, now that we have all this money, we'd like to put it to use in a way that conforms with our religious commitments.
Before that period, they were doing conventional banking, right? Before that
So
period.
this is a really interesting, so many people were, and many people weren't. So Saudi Arabia is an interesting example. Yes, there was some conventional banking in Saudi Arabia, but there was also a lot of money lending and money changing. Money changing. So there were large money changing houses, and the world's largest Islamic bank today, Al-Rashi, got its start as a money changing house. So in Saudi Arabia, historically, there have been a wide range of monies and currencies used, because so many people come for the Hajj. And so you have people coming from all over, and they bring their money with them, and it could be this kind of currency or that kind of currency. Often it was in gold or silver. And so historically, money changers had been an important sort of financial institution in Saudi Arabia. And because there were many Saudis who believed that interest was wrong, these money changers often took deposits and held onto them for safekeeping for Saudis, Saudi business people, Saudi families, and so on. They end up being well set up to effectively become Islamic banks. And this is what happens to Al-Rashi. It transitions from being a money-changing operation into effectively an Islamic bank. So you have these different routes into Islamic banking. You're absolutely right.
And at the same time, simultaneously, Malaysia as well was developing its own sector as well, right?
Yes. So really, we see that take off in the early 90s. There had been early efforts. Tabung Haji is a good example of a pilgrimage savings fund that would invest the savings of people who wanted to go on Hajj into investments that were halal in some way. And this institution still exists, Tabung Haji in Malaysia. But it's really in 1982, with the passage of the Islamic Banking Act, that you get the establishment of Bank Islam Malaysia, which is the first sort of modern Islamic bank in Malaysia. And at that point, Islamic banking, while still small, really starts to get a good deal of government support from the Malaysian state. And this makes a huge difference. And Malaysia very quickly becomes one of the leaders in global Islamic finance.
So Ryan, you mentioned in the book about interest simulation and profit and loss sharing. Could you kind of explain what exactly do you mean by interest simulation and profit and loss sharing?
Sure. So I'll start with profit and loss sharing. The basic idea here is similar to what happens in private equity or a mutual fund. Let's say that you are an entrepreneur, Hassan, and you want to start a company making, I don't know, Hassan, what do you want to make?
Shoes, let's say, for example.
Shoes,
Air
beautiful
Jordans.
shoes.
Air Jordans, yeah.
I know you're a basketball fan, so that's perfect. You're going to make these beautiful Air Jordan shoes,
or sneakers for our Americans. Sneakers.
Right. You call them trainers, right?
Yeah, trainers, yeah. But let's say sneakers.
Okay, you're going to make sneakers and you need $1 million to start your shoe factory. So there are two ways we could do this. Well, first of all, you could just go to a bank, a conventional bank, and say, give me $1 million. And I would say, yes, it sounds like a great idea. Here's $1 million and pay me 10% interest in a year. Another way we could do this is you come to me and I say, well, that sounds great. I like your idea. Here's $1 million to start your shoe factory. And if it succeeds, I will receive some portion of your profits that we agree in advance, like 60%. But if it fails, then, I lose the money. You don't lose anything except your time and your energy and your sweat equity. Now, this is what people mean by profit and loss sharing. It usually takes the form of partnership structures such as mudaraba and musharaka. And the basic idea is that because I'm the person with money and you are the hardworking entrepreneur with a great idea, I should be the one to put my money at risk. You put your time and your effort at risk, but ultimately I am investing in your venture. Now, this appealed to many of the early Islamic economic theorists because it seemed more fair. If I'm the one with the money, then I should be one taking the risk. And they argued that one problem with interest is that I can lend you money, and regardless of what happens to you, your business fails, it gets struck by lightning, God forbid, you have a medical crisis or something in your family that makes it impossible for you to work, you still owe me that interest. And they said that's unfair and that's un-Islamic. And therefore, they said this profit and loss sharing is a better way of doing business.
Sounds like a lot like venture capital.
It is very similar to venture capital. It is very similar to private equity. Yes, absolutely. And indeed, there are Islamic private equity funds and Islamic venture capital funds that don't have to adapt too much of what they do to be Sharia compliant. Now, by interest simulation, I mean the use of techniques usually involving selling or leasing assets to simulate the economic effect of interest-bearing loans without
outcome is the same.
Interest.
The outcome is the same.
The outcome is the same or very, very similar. So the simplest way to do this is what's called bay'al-ina. And that is, imagine that I have a computer, and let's say it costs 4,000 dirhams, and I sell you my computer for 4,000 and you give me 4,000 in cash. And then you sell the computer back to me for 4,200, but I don't have to pay you for a year. So you're selling it to me on credit. So what's the effect of this? The effect of this is that I still have my computer because I sold it to you and you sold it right back to me. I also have 4,000 dirhams dirham in my pocket that you gave me. But I owe you 4,200 in a year. So this is very, very similar to a cash loan at 5% on 4,000 dirhams. And we effectively used the computer as a prop. Now, this is a very controversial thing to do. It was widely used. This bay'al-ina system was widely used in Malaysia in the 1980s and 90s, partly for reasons of madhab. Some, not all, but some Shafi'i scholars have argued that bay'al-ina is acceptable under certain circumstances. Malaysia is an overwhelmingly Shafi'i jurisdiction, but also because the government accepted this in the 1980s and 1990s as a way to help the early Islamic banking system get off the ground, because it's very easy for banks to do this. There are many other examples of interest simulation when people talk about murabaha as used for financing. That is another example. When people talk about tawarruk or commodity murabaha, that's another example. And, I'm happy to explain those. I think many of your listeners will already know how they work, but I'm happy to explain them.
Yeah, we covered that well in episode 1 and also on other podcasts as well. So I don't want to go too much into that. But Ryan, this idea of PLS, profit and loss sharing, some countries, I believe Pakistan tried this in the 80s and it didn't work out. What happened there?
So a number of the early Islamic banks, so I have interviews, there are over 280 interviews that went into this book. And I talked with people who, everyone from tellers to CEOs, everyone from very junior Sharia scholars just starting out to the most famous Sharia scholars in the world. I talked to over 150 customers and potential customers of banking products. And what we see in the late 1970s, early 80s is that some Islamic banks did make an attempt to implement profit and loss sharing. And in particular, there was one recently deceased Islamic economist, really fascinating scholar named gentleman. He's not a Sharia scholar in that sense, but a really fascinating gentleman named Muhammad Nishatullah Siddiqui, whom I was privileged to get to know, who theorized what was called a two-tier mudaraba system of Islamic banking. So the idea here is that depositors are actually investors, and they use a mudaraba contract to invest in the bank. So for example, you and I and all our friends and 500 other people deposit money in an investment account, but that investment account earns a variable return depending on how well the bank's mudaraba investments do. And then the bank invests its money in Hassan Shivraj's Air Jordan factory and somebody else's, food factory and somebody else's bicycle business and whatever. And then all of these earn some return. And based on that return, the Islamic bank pays it back out to the depositors, right? So what happens here is that depositors are not, depending on the structure, they might not even get a positive return. They might even lose some of their money, just like investors in venture capital or private equity, as you said. At the very least, their return will be quite variable because it will depend on the businesses in which the bank is invested. So there were attempts to implement this in many parts of the world in the 1970s, 1980s, but it turns out that it really did not mesh well with what Islamic banks were trying to do and what their customers wanted. So I'll give you a few reasons for this. One reason is that customers were used to getting a fixed return when they put their money in the bank, right? They were used to saying, okay, I'm putting my money here and in a year, I'll get 3% more. They were not used to, please put your money in our bank. You might get 3%, you might get 10%, but you might also lose some of your money. In addition, it turns out that banks were often not very good at deciding what kind of investments were good. Maybe they couldn't tell the difference between Hassan's outstanding Air Jordan factory and some other guy's, crappy Air Jordan factory or whatever, right? So in addition, there were many banking regulations imposed by governments that said that you can't do this. A bank has to be safe for its customers. You can't tell them that you're going to give them a variable return, and all kinds of reasons. So you even had the problem of moral hazard, which is, well, I'm giving Hassan $1 million. He's telling me that he's going to use it to build up his Air Jordan business. But since he doesn't lose a dime if he fails, maybe he has an incentive just to take the money and walk away. So you had problems like this. And for various reasons, Islamic banking really couldn't adapt itself very well to this PLS system. Habib Ahmed, who is an Islamic economist at the University of Durham, put it this wonderful way. He said it was like trying to implement PLS was like a gear that was trying to turn one way when the entire global financial system was turning the other way, right? In an interest-based way. It's really, really hard. And so as a result, these Islamic banks turned to interest simulation, and that became overwhelmingly what they do. And that really set the pattern for how Islamic finance still works today. It is almost entirely about interest simulation.
Are there any examples today of it where PLS is being used in the world?
So sure, there are. So one, of course, is, Islamic private equity, Islamic venture capital. That's almost PLS, like by definition. Or, buying stocks, right? You are investing and you are taking risk. But if we talk about the business of Islamic banking, it's quite rare. And when I say quite rare, I'm saying like less than 0.1% of sort of global Islamic banking assets are used with actual. Now, when I say actual PLS, I talk in the book about how there are many uses of ostensibly partnership-based structures, such as musharaka and mudaraba. A diminishing musharaka used to purchase a house is a good example, in which you can actually use partnership structures to simulate interest-bearing loans. So just because something is called a musharaka or mudaraba, a partnership instrument, doesn't mean that what's going on is sort of true PLS. Now it's up there.
No, it's kind of like I was just thinking of an anecdotal example. Is like I have an Islamic savings deposit account with an unnamed bank. I won't name which one, and they call it a wakala deposit account. And you deposit your money into the account, say $20,000 or £20,000, and the bank says they expect to make a return of 5% within 1 year or 18 months or whatever you sign up for. And part of that money is guaranteed under the Bank of England or the regulators. All banks in the country have to adhere to a certain level of adequacy, capital adequacy. So if the bank goes down, the government guarantees basically 80,000 or whatever, 100,000. And then beyond that, and the bank basically sent me a letter saying, if we expect to make less than the 5% we expect, then we'll give you your principal back and whatever you've gained from that. So it seems like there's a lot of what I'm trying to get at is there's a lot of ring fencing, despite the fact that this is supposed to be a wakala product where, you're exposed to like project risk, but in reality, you're completely ring fenced by the banking.
So you're 100% correct. This happens with wakala. This happens with mudaraba investment accounts. So the way this is done in many cases is using a technique called profit smoothing. So let's say you put your money in basically an Islamic savings account. They will not guarantee that you will earn, let's say, 3% a year, but they will say that we have an expected profit rate of 3% that is based on past performance and so on. So then what do they do? Well, they say that they maintain what's called a stabilization fund or a profit smoothing fund. And in the event that the returns on some basket of assets they hold, some basket of Sharia compliant assets they hold is higher than 3%, then they put the excess over 3% in the fund. So let's say they earn 3.4%. Then they put 0.4% in that fund that month. But let's say they earn 2.7% in some month, less than the 3% that you are expecting. Then they will give you a gift, a hiba, from the fund of 0.3%. And this way you end up getting either 3% or, 2.99, 3.01, something very close pretty much all the time. So this raises a really interesting philosophical question. Is that riba? Is that interest? If I tell you, well, I'm not lending, you're not lending money to the bank at 3%, because there's a possibility that it won't be 3% that you get back, but they're employing all these techniques to make sure that it actually is 3%. I don't know. That's like just sort of one of these interesting philosophical questions that make Islamic banking so fascinating, in my opinion.
One thing I wanted to ask you, Ryan, I recently went to the AOFI conference in Bahrain a few months ago, and I just returned back from the Sharia conference. And I'm sure you're aware of AOFI Sharia Standard 62, which basically is kind of alluding to what we've been talking about for the last few minutes about profit and loss sharing, where it could completely alter the way sukuk, which are Islamic bonds for our listeners and viewers. Do you have any initial thoughts on what this standard could actually mean and what examples that people could learn from the previous failures of PLS?
Yeah, so just to recap, many of you will already know about AOFI Sharia Standard number 62, but for those who are less familiar, AOFI is the accounting and auditing organization of Islamic financial institutions. It issues Sharia standards that are approved by its Sharia board, which is a large group of prominent Sharia scholars from around the world. And one of the really fascinating things that AOFI has been doing in recent years is trying to push for a more, what some people would call substantive orientation toward Islamic finance. So most of the sukuk in the world do not mandate actual legal transfer of asset ownership to sukuk holders, even though in theory of sort of an ideal Islamic legal situation, that's what would happen. Instead, all you are having transferred to sukuk holders is the economic benefits or the usufruct, the rental income from an asset, and so on, for example, in the case of the sukuk al-ijara. But what Sharia Standard 62 would do is require sukuk holders to share both the reward and the liability associated with the underlying asset. Now, there's a Sharia maxim, al-ghurm bil-ghurm, right? So one is only entitled to reward if one takes on liability. And as you pointed out, this is sort of the essential spirit of PLS. But until now, this has not really been implemented. We did have some interesting cases in 2008, I believe 2007 or 2008. Mufti Taqi Usmani declared that many of the sukuk in the world were actually not Sharia compliant, and you saw the
Mhm.
sukuk market tumble. Now you have a larger group of prominent Sharia scholars saying, we need to move in this direction. Shaken the sukuk market already. And this is something that you cover a good deal and could speak to much better than I could. But this is really, to me, a fascinating case in which there is a tension between the idea that there should be some substantive difference between Islamic finance and conventional finance, a substantive economic difference, and the idea that the Islamic finance should offer a halal product approved by Sharia scholars that allows people the sort of fruits of modern finance. Now, the sukuk market is very large. It is the second largest component of the sort of Islamic finance universe after Islamic banking. And if more and more countries accept Sharia Standard 62, then we could see a situation in which sukuk issuers need to restructure or start restructuring their issuances. Now, AOFI is aware that there's been a good deal of, hand wringing and backlash and concern about this. And so I think yesterday or 2 days ago, it issued a statement saying, hey, we just want you to know we're going to take into account the sort of stability of the market. We're going to take into account, doing things in a way that doesn't completely overturn the apple cart. And yet that may assuage some sukuk issuer and some sukuk investor concerns. But I think this is a really, really fascinating case. We're really at the edge of uncertainty.
Mhm.
It's a rare case that you see such a successful, flourishing financial system try to change itself in a way that threatens to make itself commercially less successful.
Mhm.
And I think that's really, really interesting.
Yeah, what was interesting, I went to a workshop about the Standard 62, and you're right, it presents a lot of challenges from the accounting and legal perspective of issuing such a sukuk. And my opinion is that, a country like the United Arab Emirates, which higher Sharia authority at its central bank, uses AOFI standards or implements AOFI standards, how far are they willing to enforce such a standard depending on when it comes out? Do you see countries really adopting like a completely completely different system? Because the way sukuk works right now, it's just a financing mechanism similar to unsecured bonds, really. Nothing too dissimilar from what's already out there. Do you see such like appetite for such a thing like that?
That is a difficult question. I'd have to look into my crystal ball.
Your halal.
My halal crystal ball. My guess is that many will not. So if you look at the countries that have adopted AOFI Sharia standards, there are some that have effectively made it mandatory. Bahrain, of course, was the first, but you have others. I believe Qatar, Oman, Jordan, Kyrgyzstan, Nigeria, Pakistan, Sudan, Yemen. And then you have some that have sort of taken it more under advisement. And then you have some that just say, hey, we do our own thing. Saudi Arabia is a great example. I don't see them signing on to AOFI standards for a long time. And a lot of this has to do with how powerful the community of Sharia scholars is in a country and how committed they are to their own autonomy. And Saudi Arabia is a consummate example of a place where Sharia scholars are very prominent socially. Right? They have a lot of power. I mean, the most famous Sharia scholars in Saudi Arabia, including some who work in Islamic finance, are like celebrities. So it's harder for them to come on and, it's harder for the government to say, and the government wouldn't want to say. I mean, I actually asked the former governor of the central bank of Saudi Arabia about this. And he said, no, we're not going to start telling our Sharia scholars what to do. They're independent. They're autonomous. They're very well trained, and they are able to figure these things out for themselves. In the places where adherence is a big deal, look, you have some countries where it might just not matter that much. Some countries with small Islamic finance sectors that don't issue a lot of sukuk. But in bigger places like Bahrain, like the UAE, like Pakistan, even certainly Qatar, I could see a scenario in which temporarily or permanently some sectors move away from the AOFI standards. Or they may say something like, well, we're going to take our time to implement it. This to me is a more likely scenario is, well, we're going to stretch things out and we're going to have a time frame of 5 years to implement it. But then, 5 years, do they actually implement it in 5 years?
Kick the can down the road.
Kick the can down the road. Exactly. So I think that's very possible. There's so many potential risks, right? So sukuk investors and issuers, they have new credit risks, market risks, legal risks, operational risks, liquidity risks, right, with asset-backed structures. So
Interesting.
it's a big deal. Yeah.
Just leading on to that, one thing that just came to my mind was, in your book, you talked about interviewing all these customers. Do you think there's empirical evidence to suggest that customers actually want PLS, or do they prefer interest simulation?
So the vast majority of ordinary customers who just go to their local branch do not care, and many of them don't even know. So the truth is, today, in the large markets for Islamic finance, right? I'm not talking about the United States or even the UK, where there's just a very, very, very small number of Islamic financial institutions. So if you go, you're someone who's really committed to going. You're going there for a reason. But if you are in Malaysia, you're in the UAE, you're in Saudi Arabia, you're in Qatar, like there's a good chance you're just going to the Islamic bank because it happens to be the closest bank, or they have good rates, right? And the premium on ordinary Islamic products has declined to the point where it's no longer, generally speaking, more expensive to buy a typical. It's pari passu. Well, pari passu from a legal perspective, but also from a pricing perspective. Where I think the real differences kick in is at the level of high finance. So we're talking about the sukuk market. We're talking about huge, hundreds of millions of dollars or billion-dollar syndicated financings. And it's really in these places, I argue, that the Sharia scholars are especially important. Sure, in some places, Pakistan is a good example. Sharia scholars are important to your average customer on the street sometimes because they've heard of Mufti Taqi Usmani, so they know he endorses a particular Islamic bank, and therefore they may be more likely to go. It's much more, the role of Sharia scholars, I argue, is much more important in corporate lending. And the higher up you go, the bigger the size of transactions, the more important the role. Why is this true? Is it true because sort of big ticket investors are more religious? That could be part of it. But I think what's really happening is that really famous internationally elite Sharia scholars play a coordination role. If you have one investor from Egypt and one investor from Malaysia and one investor from Kuwait and one investor from Saudi Arabia, and they're investing in a business that's in the UK, all the investors may have a different set of Sharia structuring preferences. And the Sharia scholars involved, in the worst case, may have conflicting expectations. But I argue that what has happened is that some of the Sharia scholars at the very top, these sort of internationally elite, sort of what they call the brotherhood of maybe a dozen or so scholars, they're important not only because they're very knowledgeable, but because they can coordinate well with one another and with their clients to sort of get on the same page and make these big ticket transactions happen.
Interesting. And then, Ryan, one thing that came to my mind was I wrote an article a few weeks ago about Pakistan wanting to go to an interest-free banking system by 2027. And it kind of reminded me when I was at the AOFI conference in November, and I met somebody from the Central Bank of Afghanistan, just sitting next to him casually during one of the intervals during one of the sessions. And, he was telling me about how very Islamic they are and everything with the new government over there. But when I asked him, like, you're still doing banking, you're still like interacting with the riba fiat-based international system. Like, how are you saying that you're like different to what's already being practiced? His response to me was basically, well, I have to buy commodities, he said. I have to buy like wheat. I have to buy fuel from the international market. So I guess my question to you is, like, if we look at countries like Iran, Pakistan, Sudan, Libya to a lesser extent, do you really think that countries have the appetite or want to adopt such a system that's outside of the international financial system?
Yes and no. I think that at the level of domestic banking, there is some appeal to governments that already have a fast-growing Islamic banking sector and are in countries where the population is almost entirely Muslim. Afghanistan is a good example. And where making the entire system Islamic wouldn't be that politically controversial. So it's never going to happen in Malaysia, which is only about 60% Muslim. But could it happen in Afghanistan? Sure. Could it happen in Saudi Arabia? Sure. Could it happen in Pakistan? Sure. Now, so the question is there an appetite for some governments to go fully Islamic? And I would say there is. Now, what makes it possible? Well, an example I use, Coca-Cola in the United States. Do you know what percent of Coca-Cola sold in the United States is kosher?
No, I don't.
Every single Coca-Cola sold in the United States is kosher. It has been certified as kosher by a certain set of Jewish rabbinical authorities. Why is that the case? The vast majority of people buying Coca-Cola in the US are not Jewish, and even those who are Jewish, most of them don't care. But the reason is because the cost of certification is very low relative to the amount of Coca-Cola they're selling. So what is happening in Islamic finance is that as interest simulation has gotten more and more sophisticated, the cost of establishing an Islamic financial system, an Islamic financial infrastructure, the cost to customers, the cost to banks, it has gone down. Moreover, you have the sort of demonstration effect. If you watch one Islamic bank in another country or in your country do it, you know how to do it. You know how to convert into an Islamic bank. You know how to issue Islamic financial instruments and so on. So for all these reasons, the cost of becoming Islamic from a banking perspective has gone down. And with that, you're basically giving people a choice. Like, would you like organic oranges or oranges sprayed with pesticide? They cost the same, they look the same, and they taste the same. Well, I think 99% of people would say, give me the organic orange. Would you like tuna that has been caught safely and doesn't kill dolphins, or do you like tuna that kills dolphins? But they cost the same, they taste the same, they look the same, they're nutritionally the same. Give me the dolphin safe tuna. So what we see here is that this is also happening in Islamic finance. It's become much easier for banks and indeed even governments to become Islamic, and that is spurring the growth of Islamic finance in many ways, in addition, of course, to customer demand. So that's half the answer at the domestic level. But you also asked this gentleman about the international context. And to me, that is very, very different. It is much, much, much harder to disengage with the global interest-based system when you are talking about sovereign lending, when you are talking about international investments, when you're talking about international trade. It is almost impossible unless you sort of try to become this like autarkic economy, almost like a North Korea. And even then you're not really. In a globalized system, it's just basically impossible. So I think we'll continue to have this situation in which you have perhaps more countries that transition to a sort of fully Islamic system. In Saudi Arabia, something like 80% of banking deposits and almost 80% of banking assets are already Islamic, right? So getting to 100% is not that big a deal, right? If you look at shares on the stock exchange, most of them are halal, certified. So getting to 100%, also not totally impossible, but it's a very different matter internationally speaking.
I mean, Pakistan wanting to be completely riba-free by 2027, end of 2027, beginning of 2028. To me, okay, fine, you're riba-free, but that's not really going to, change its sovereign debt situation or fix its underlying challenges in its economy, right?
No, it won't. And what's interesting about Islamic finance in Pakistan, and I got this out of many conversations with ordinary customers, with bankers, to many people, there's an appeal of the idea of having a system of banking that is not simply the same old international interest-based system. Because to some people, certainly by no means all, right? By no means all Pakistanis, but to some, that stands for the IMF's exploitation of Pakistan. That stands for US exploitation of Pakistan. That stands for British colonial history in Pakistan. And these are very, very real forms of exploitation that continue to this day. And so there is a resonance to some people of the idea of Islamic banking, even if in the end, it doesn't do too much to change those kind of neocolonial forms of exploitation. Whereas in the Gulf, I argue, so I have this chapter of the book that contrasts the politics of Islamic finance in Pakistan and in Saudi Arabia, and the reason why it has grown in different ways in these two places. And in Saudi Arabia, the problem is not so much one of development. The problem is not how can we create an Islamic form of finance that throws off the yoke of neo-imperialism and that rescues our people from poverty. But rather the question has been, starting in the 1970s, well, we have all this excess wealth. What do we do with it, right? Now, I don't mean to imply that all Saudis are wealthy. There are a huge middle class, there are poor Saudis, and so on and so forth, right? And it is on average less wealthy than, say, the Emirates, Qatar, Kuwait. But the Gulf countries faced a different kind of problem historically when it came to Islamic finance. It was not really how do we find an Islamic way to help our poor? How do we find an Islamic way to fight the international financial system, but rather how do we find an Islamic way to fit into the international financial system? So therefore, the sort of political tenor and the ethical character, not ethical, but the political tenor of Islamic finance takes on a very different role in these two countries.
As we bring the podcast to a close shortly, there's just two areas I wanted to ask you. You know, in the book you mentioned a lot, and even in the book's title about Sharia scholars, and you've just touched on this point just now, is that Islamic finance as an industry and Sharia scholars as an industry are not too politicized, right, within the context of the Gulf or the other countries where it's prominent.
Yes. The book is titled The Paradox of Islamic Finance. And actually, it's based on two paradoxes. One paradox is, why is it that there is a $3.4 trillion Islamic finance industry, but no $3.4 trillion Hindu finance industry or Christian finance industry or Buddhist finance industry or Jewish finance industry or whatever? And the other question, the other paradox is about interest simulation. Many customers, perhaps most, are very well aware of interest simulation, or they can certainly find out. It's not like the banks try to hide what they're doing, Islamic banks, Islamic financial institutions. So if Muslims are concerned about riba, why do they patronize Islamic financial institutions? I'm not saying they shouldn't, but all this, and the answer I give in the book is that it is the Sharia scholars who make this reconciliation of Islam and religion possible. They legitimate and justify forms of interest simulation, but they also hold a line against riba, and they also do serious work to ensure that banks and corporations don't go, in their opinion, too far. I don't subscribe to the argument that Sharia scholars, especially powerful Sharia scholars, just do anything that that their banks want them to do. One of the arguments of this book is that they have actually real power and real sway, especially the most senior ones, to affect the way markets work. And I think you're seeing exactly that when it comes to Sharia standard number 62.
Perhaps a very controversial question is that I just came back literally a few days ago from the AOFI Sharia Boards conference, and someone was mentioning to me about AI. AI has been a very hot topic in a lot of different industries and sectors over the past year or so. Do you think that AI presents a threat to Sharia scholars?
Broadly speaking, no. I think AI could matter at the lower levels. For example, not all Sharia scholars sit on the Sharia supervisory boards of Islamic banks or Islamic funds or so on. There are many, many Sharia scholars who are employed in internal Sharia departments. Now, I do think that AI will be helpful in automating some of the auditing work that a lot of internal Sharia departments do. But frankly, most of that work is not done by Sharia scholars. Anyway, the Sharia scholars are sort of the reference point for the people who do that work. Ultimately, though, I don't think AI is going to replace Sharia scholars. We're not going to have robot Sharia scholars for a while, partly because it is those Sharia scholars that I argue in this book make Islamic finance distinctive and make it successful. Part of the reason is because some people, again, as I pointed out, many customers do not care. Many customers do not even know who's on the Sharia board of their Islamic bank. They have no idea. But some do care. And just to say, come to this Islamic bank, we have the best robot on our Sharia board is less appealing than we have this individual who is known to you, is known as an expert, and is part of a historic lineage of Islamic ulama, right? A tradition of sort of expert knowledge that goes back to the beginning of Islam. So that human element is important. I also think that at the higher levels, I was talking about, what we might call haute finance in French, high finance, where we're talking about interactions in the hundreds of millions of dollars, billions of dollars between corporations or among sovereigns or so on. Their Sharia scholars are important because they play a coordinating role. They make sure that transactions move smoothly. And you can't just have a robot doing that. There's a human element of interaction between the scholar and the issuers, between the lead scholars and the other lead scholars, where it can be a process of discussion, of negotiation. It's not simply, here's what I believe, you can put it in an algorithm and then, boom, that's it, right? There's a lot more to it than that. And that's why I think we will not, who knows what the future is going to hold in 20, 30 years, but I don't foresee sort of AI Sharia scholars taking over, robots taking over the leading Sharia scholars role in the next 15, 20 years. I do think there will be some automation of Sharia auditing functions, but that's a very different thing.
So Ryan, tell us any projects you may be working on, any upcoming projects you may be working on.
Yeah, so I've got two. One is a book on frequent flyer miles, and particularly its relationship to credit cards. As it turns out, and many people don't know this, but the largest airlines in the world make more money through their frequent flyer programs than by selling tickets to ordinary paying customers. And the way they make money is by selling their miles to banks, which then issue travel credit cards and give people bonus miles for signing up for those cards. Now, this has all kinds of wacky consequences and interesting complexities that I did not know about before I started studying this system. It means that some of the world's largest airlines are really becoming more like banks than airlines. It has to do with all kinds of things like airport lounges and the awful experience of flying in basic economy. It has to do with all kinds of strange ways in which frequent flyer miles can now be used. There is a story of an online travel agency in Brazil that became the largest homegrown one in Brazil and then suddenly exploded and left 800,000 people without tickets they'd paid for. So there are all kinds of interesting aspects. It's like frequent flyer miles. We just see the tip of the iceberg, but there's all kinds of fascinating, strange stuff going on underneath. And that's what I talk about. So the other book that I'm working on is about what I call halalization. Now, other scholars have used that word in different ways, but what I mean by halalization is when you look at a product or a category of products that people didn't really worry about certifying as Sharia compliant in the past, but now they think about it that way. So finance and banking is a good example. For a long, long time, there were many people who said, going to a bank is haram or lending an interest is haram. But it was really only in the 60s and 70s that you started having these things called Islamic banks. And today, as your listeners know, you can get an Islamic bond or an Islamic currency swap or any number of things. So this is an example of what I call halalization, where you take something that wasn't previously contested really in the matter of halal or haram, and then bring it into a situation where there are Islamic versions or Sharia compliant versions and non. So another example is cosmetics. You may be familiar with this. You can now get halal nail polish. There are now halal vaccines available. There are now halal pharmaceuticals. There are even people who are doing controversial things like labeling their bottled water as halal. There are Sharia compliant housing complexes. There are Sharia compliant hospitals. So the question I ask in this book, I sort of do this world tour of these different kinds of halalization. And I ask, why is this happening? Where is it happening? And what does it tell us about the relationship between religion and capitalism in the 21st century?
Amazing. And how can people read more about your research?
Yeah, thanks. Well, the book, The Paradox of Islamic Finance, just put in a little pitch. It is available wherever you get books, Amazon and so forth. You can also go to Princeton University Press and order it. Write me if it's not available in your country, and I will happily make it available. And then you can just go to my website. Just Google Ryan Calder, RyanCalder, JHU, which is Johns Hopkins University. And you'll find my pages.
I'll link it on those show notes, and I'll make sure people get a copy of the book. But Ryan, this has been a really fantastic conversation, and it's a fantastic read, and I highly recommend people read the book and check out your research. And Ryan, thanks again for coming on the podcast.
Thank you so much, Hassan. It's been an honor and a pleasure. It's always good to talk to you.
Likewise. If you made it this far, you must have enjoyed that episode. If you did enjoy that episode, don't forget to like, share, and subscribe. It really helps us bring you more great insights. Follow us on LinkedIn and Instagram for the latest updates. Got feedback or guest suggestion? Email me at hassan@majlisandmarkets.com.